Courtney, thanks very much. Gasoline prices might slow down summer travelers in the United States, but Starwood Hotels is showing no signs of slowdown, particularly in China, where the company will be opening one hotel every 2 weeks for the next 3 years in China. In fact, Starwood Hotels will relocate global headquarters to China for a month-long managerial endeavor. Our next guest is headed there right after the interview tonight. Before that, we get his take on where he sees the health of the economy, the hotel industry right now. Joining me in a CNBC Exclusive is Fritz Van Paasschen. He is Starwood Hotels and Resorts Worldwide CEO. Fritz, very nice to have you on the program.
It's great to be here. Thank you.
I want to chat to you first about this move to China. Why are you going to China for moving the whole headquarters there for a month-long managerial endeavor? What are you trying to achieve?
Well, the real objective here is China is such a growth engine for us. You mentioned every 2 weeks we'll be opening a hotel. 1 in every 3 hotels that we're going to open in the next 3 to 4 years will be in China. So this is an opportunity for us to get closer to that market.
What can you tell us about operating in China? You know, we hear so much about the opportunity. 1.5 billion people, you've got to have a foothold there. And yet we hear just as much about the barriers to entry because the Chinese recognize that the population is enormous and you've got to have a joint venture. Have you had any troubles in terms of ownership and operating in China?
No, one of the great things about our business model is we work with local real estate developers and investors. So the vast majority of the hotels that we have in China are owned by Chinese developers. And what that means is we have partners on the ground who know the market, know how to get things done, and want to work with us.
Of course, China's story seems to be really dictating the story of the markets, the story of the global economy every day. Every time we feel that things are slowing down, the commodities sell off or etc. Have you seen evidence of a slowdown in China?
No. And in fact, what we've seen is because China is such a large and dynamic economy, you'll see fits and starts in supply and demand. After the Olympics in Beijing in 2008, we saw a slowdown in Beijing. It didn't last 12 months before there was a shortage again. 300 million people are going to be moving from the countryside to cities in China alone, basically the population of the U.S. So there's a long runway of demand growth right now.
And you think that transition will be smooth?
I can't forecast that it's going to be smooth, but I can tell you that the growth over the last 30 years has been absolutely extraordinary. The availability of capital there has continued to accumulate. And so the build in demand is absolutely there. Will it be a smooth trail? We'll see.
Sure. I mean, these are tough transitions. I mean, we're strictly moving from an export-led economy to a consumer-led economy. What about the U.S.? What are you seeing?
Well, right now what you see is corporations are very profitable. Most people don't realize, but 3/4 of our business is B2B. So companies are getting out and traveling. We're all recognizing that this is a recovery, but not a terribly strong one. So companies know that to grow revenue, they have to get out and get after business. So we're seeing travel. We're seeing growth in that respect. But at the same time, there isn't enough construction lending right now to open new hotels. So what that means is rates are only going to continue to go up for a few years now because it takes 2, 3, 4 years to build a hotel. What
about inflation? I mean, one of the beauties, I guess, of your business is you could rewrite the rules every night. You're setting prices for hotel rooms every day. What are you seeing in terms of pricing?
Well, pricing is starting to come back. Basically, the way hotel recoveries work is hotels fill up, and as the hotels get closer to being full, then rates start to increase. And in that respect, this recovery is just like every other one. The last 18 months have been a steady increase in occupancy, and we're now seeing rates building, and we'll probably see rates getting to where they were in another 18 months.
Okay, so you're seeing the B2B section. I mean, obviously that's largely your business. The business traveler with $2.5 trillion on the balance sheet for corporate America is doing well. What about residential? What about the other part of the business?
Well, the leisure part of our business is also starting to come back. So in 2009, we saw leisure travelers starting to come back. It built in last year, and what we're seeing for bookings so far in 2011, July 4th, for example, they're doing great. And that's without the deep discounts that we saw over the last 3 years.
The bookings in the summertime, what do they look like?
They look strong. So they're up.
And you're saying that that's not necessarily because of various attractions and luring people with deals.
That's right.
Yeah.
Now, the only deals you can really get today are in Mexico, where the resorts are still below levels of occupancy where they've been before. but U.S. The bookings are very strong across the board. In fact, what's interesting is it's now not just in the bigger cities, but we're seeing strong growth in rate across the entire U.S. market.
You know, looking at the business part of travel, it looks very strong, and everything you're saying sort of, you know, underlines what we're hearing about the business side. And yet we've got a market that's down 5 weeks in a row, and we've got $2 trillion in market value gone from global equities and a commodity sell-off, and this increasing, creeping worry about the U.S. entering a soft patch. You don't see that?
We don't see it today. The other dynamic that I think is taking place is companies are profitable, people with money are very underleveraged, but people who are unemployed, people who had leverage going into the downturn, who are still struggling, aren't doing as well. With a 9% unemployment rate, you've still got a large part of the U.S. population that hasn't seen the crisis completely pass. But from a business perspective, from a global company perspective, things are looking pretty good.
Fritz, great to have you on the program.
Thank you.
Thank you so much. We appreciate it. Fritz Van Paasschen joining us from Starwood. We are in the final stretch, 9 minutes before the closing bell.